Hello guys and welcome again to my channel. So we are still on the merchandising series. I consider this one of the special episodes. So on the merchandising ones, we have talked about how to make entries on merchandising entities until we have had our illustrative problem already in the past videos where I illustrated to you how do you perform the step 1, the identification of transactions, until step 10, the reversing entries, right? So at this point in time, we are already through with that. Plus, I also have had the entries for perpetual inventory system because what we did, the step 1 to 10, for the longest number of episodes in the past, it's all about periodic inventory system. So we're already through with comparing perpetual with periodic inventory system. Okay? Now, at this point, I would like to um, be straight to the point. Our topic will be establishing the merchandise inventory and amounts. And I've already told you before that even if you are using periodic inventory system, you need to establish the merchandise inventory and even the perpetual inventory system. You need to establish the merchandise inventory and through inventory count and etc. For the periodic inventory system, we need to establish the merchandise inventory end simply because we need to compute for the cost of sales. If we do not do that, then there will be no amounts for merchandise inventory beginning and merchandise inventory ending, and you cannot compute for the cost of sales and you cannot compute the net profit for periodic inventory system. For perpetual, even if the cost of sales and the merchandise inventory is automatically computed, actually, we still need to establish the merchandise inventory and amounts and perform inventory counts so that we will be able to compare the physical count of the merchandise inventory versus the merchandise inventory in the books, which is again automatically computed. Every sale, every purchase, it is always updated. Okay? In order to be sure that the physical inventory coincides actually with what is in the books. Okay? So, let's do that in this video. So, here is an illustrative problem. So, Baby J Company has its ending inventory in units of 9,700 units of product X. These goods are normally sold at a price of 10 each. The changes of the inventories are detailed below. So, first, we have the beginning inventory, 1,000 units at 4.5. But before we go further, I told you that the cost per unit does not only include the cost per unit in the supplier. Sometimes you are going to, not sometimes, always, you have to add in here the freight cost, the freight in, the cost that you have incurred in bringing the inventories from the supplier's place, for example, up to your store, something like that. So let's consider this problem, this cost per unit, to include already the freight in for simplicity of discussion. Okay? So we have 1,000 units at 4.5. Again, that is cost per supplier plus freight in. And then we purchase during the month on 1/7 or January 7, 1,000 units at 4.7. However, we return 2,300 units. That's on 1/12. And we purchased again another batch at 1/17, 6,500 units, but this time it is now costing 4.6 per unit. And the sales, we sold 10,000 units again at 10 pesos each. And then sales returns, we have 1,500 units. We returned it. No, now, the customers, our customers returned this 1,500 units. Sales returns, customer returns. Okay? And then we have purchased another set on January 28, 3,000 units at 4.8. The question here is what is the ending inventory amount? Okay? So there are challenges to this establishment of merchandise inventory end. First challenge is that you have to establish this 9,700 units. So how do you do that? That 9,700 units is mainly coming from your inventory count in the warehouse. So that's the first item. 9,700 units or ending inventory could be, number one, the inventory units that you counted in your warehouse. Okay? However, if in your warehouse, there are goods that are not yours because you're accepting goods on consignment, you have to deduct that. So, what will happen? Merchandise inventory counted in your warehouse minus the goods that you are holding under consignment from other parties. Okay? Next, challenge. You have to also put there the goods that you consign to other companies. Like for example, if your company is selling snacks, for example, ready-made snacks to different schools, to different students, for example. So, since your company is far from the schools, all over the place that you are targeting, you are sending inventories to different areas that are near schools. So, if you have those inventories, those goods are considered as your goods on consignment. You have also to include that one in the 9,700 units or your ending inventory. Okay? So, that's another one. And the fourth one, if you have inventories that are in transit still, you are the purchaser. And then from the supplier, the goods are already in transit to you. Those will be added also in the ending inventory if those inventories are shipped FOB shipping point. Shipping point. FOB shipping point. It's because those inventories are already yours, because the goods have already passed upon shipment and you are the buyer, so meaning that's already yours. And then, as a seller also, if you have goods in transit, not yet in the premises of the buyer, you have to include that also in the ending inventory if those are shipped FOB destination. Okay? So that's the first challenge, establishing the units. So, in here, in our example, we are going to assume that this 9,700 units includes already goods on the warehouse, that's number one, minus the goods in the warehouse that are not yours because they are just consigned by other parties, plus the goods that are not in your warehouse because you have consigned it somewhere. Fourth, the goods that are in transit, so meaning it's not yet in the warehouse, from your supplier under the terms FOB shipping point, and the goods in transit to your customer under the terms FOB destination. Okay? So you just have to remember those. Because actually, the ending inventory that we are establishing here includes all the inventories that you own. Okay? So next, the next challenge for establishing the merchandise inventory ending amounts is the unit price. Because we cannot use the number of units in order to compute the cost of sales. We need the amount, the monetary amounts. Okay? And as you can see here, it's very clear that if ever we have 9,700 units, the question is, what is the unit cost that we're going to use? Is it 4.5? Is it 4.70? Is it 4.6 or 4.8? Okay? So that's the challenge. So that challenge can be answered depending on what method are we going to use. So there are different methods. The first one is the specific identification. So how do we use specific identification? Actually, for example, you don't have any goods that are on consignment. You have no goods in transit from supplier, goods in transit to your customers. Everything is in the warehouse only. You did not receive also any consignment from other parties, something like that. So, the inventories 9,700, for example, is in your warehouse. Okay? Now, on the 9,700, it's your, what do you call this? It's your style. to have specific identification, that meant each of the purchases that you make, 10,000, 5, and 3,000, you are putting in the inventory itself, the cost per unit. So in the end, what will happen is that if you counted 9,700, you just have to look at the inventories. Is it part of the 4.5? Is it part of the 4.7 group? Or is it part of the 4.8 group? That's it. That's specific identification. So the 9,700 might be uh, a combination of those groups that have different purchasing cost per unit. Okay? However, it's very tedious if ever your company is selling small small value items, many high volume small value items. Okay? Like for example, candies and etc. It's very impossible to have the specific identification unless you are selling high value few items. So high value luxury items, for example. For example, cars. You're selling cars. You're selling houses, something like that. Luxury cars, luxury items. Okay? So if that is the case, specific identification is very good to to use in order to get the ending inventory. Why? Because if ever you have 10 luxury cars, you already know how much is the cost of that, right? So if you have 5 cars, for example, 3 cars are worth 2 million, and the 2 cars, the remaining ones, is worth 1.5 million. Of course, the two remaining cars, 1.5 million times 2 is 3 million. It's the ending inventory. So it's very easy to use a specific identification to few luxury items if you are selling those. Okay? But if it is low value, high volume items, my God, specific identification is very much impractical. Okay? Which is why we have other valuation. Let's start with FIFO, periodic. So FIFO periodic, actually FIFO is spelled out first in, first out. Okay? So on the first in, first out, it's as if the first batch that you are going to purchase will be the ones being sold at first. That is an assumption. For example, the beginning inventory is 1,000 units. That means those are the goods that were purchased in the past period. However, it was unsold. So under the first in, first out, this is the first one to go. So meaning, if there are sales just like this is the first one to go. That's first in, first out. Of course, if there are subsequent, like for example, this 10,000 units, it's impossible that this 1,000 units could suffice this 10,000 units sold. So meaning, the next group that was sold, 1,000 units sold, is coming from here. The 9,000 is coming from here. That's it. That's FIFO. The first that you have purchased will be the first one to be sold also. Okay? So, how do we compute for FIFO periodic? FIFO periodic is just like this. How many goods are remaining? You have computed 9,700 units. Now, if that is first in, first out, that means the first group are sold immediately before the next batch. Then, this 9,700 units might be coming from the most recent purchase because since there are remainder, the most recent purchase is as if not yet sold. The most recent purchase in here is the 3,000 units at 4.8. So, this 3,000 units might be included in this 9,700 units remaining. Okay? But since there are still remainder, 3,000 units has already been explained. However, the 6,700 has not yet been explained, right? So what we will do is look for the second group, the second latest group that was purchased. And we have 6,500 units at 4.60. So 6,500 units at 4.6. Still, this is 9,500. We are still lacking by 200. I guess that's 200. So, the 200 would be here. So, meaning 200 units at 4.7. That's the FIFO. Because it's very literal. The first to come to our company will be the first one that will be sold. Where is my calculator? Oh no. Okay, let's use the tablet. So, in computing for the ending inventory, 3,000 under FIFO periodic times 4.8, you have 14,400. And then 65 times 4.6 equals 29,900. And then 200 times 4.70, 940. Let's check again. Before checking, let's go for the total. 14,400 plus 29,900 plus 940 equals 45,240. That's it. It's just a logic. The first that you have purchased will be the first one to be sold, which is why the ending inventory might be coming from the most recent purchase that you did. Okay? Now, next is we have FIFO Perpetual. So FIFO Perpetual is using the perpetual inventory system, whereby you're not going to have a shortcut like this that the 9,700 is automatically from your recent purchases or from your latest purchases. In the FIFO Perpetual, you have to take a look at the flow of the inventory step by step. Okay? You will see that now. How is it? Example, you'll start with January 1. That is the beginning inventory. That's the description. You can put here the date, the description, the number of units that was remaining or that was purchased if ever we're talking about purchases. So that's 1,000 for the beginning inventory times the unit price or the price per unit. That's 4.5. And then we have the totals. So 4.5 times 1,000. Again, that's 4,500 if I'm not mistaken. I'm not sure. Actually, I'm very hungry. 4,500. So the running balance, this is very important. The running balance is 4,500. Let me check if it is still recording, okay? So that's for the beginning inventory. Next, so step by step, you are going to compute. On 1,7, you have purchases. The description is purchases, which is 10,000 units times 4.7. Yeah, 10,000 times 4.7 equals 47,000. And because of that, the running balance is already 51,500. That's it. Next is you have 112. But this time, this is a purchase return. So we have returned the units maybe because again of some damages and etc. if ever, or the supplier did not follow the specifications that we have given. So again, if we return, that's negative 2,300 units. The question is, what is the amount that we're going to put here? The price per unit. Of course, logically speaking, if you are going to return now, maybe the items that you have checked is from the recent purchase, right? It's logic. So, if you are um, selecting between these two groups, of course, these two, three came from the recent purchase. Because again, the beginning inventory has been purchased in the past period already. So meaning, since it was purchased in the last period already, it was checked by you in the last period already, right? And there are no damages maybe because it was copied now. The 1,000 units, it was, what do you call this? It was forwarded for this current period, right? So it's very logical that what you have returned is from the recent purchase. Okay? Because when you purchase, you check it immediately. That's logic, right? So 2,300, we're going to put that at 4.7. 2,300 times 4.7 equals negative 10,810. So, from the running balance of 51,500, this one, minus 10,810. That's 40,690. So again, if there is a purchase return, you look for the most recent purchase because maybe that's related to that. Unless the purchase returns has been 10,100, then that means 10,000 came from here. You returned everything already and the 100 came from here. Okay? But then again, you have to remember the logic that if you purchase return, that means that came from the recent purchase, not from the oldest purchase because the oldest purchase group has already been checked when they arrived. Okay? So, that's it. Let's go for 117. On 117, 6,500. There is a purchase. I forgot to write. 6,500 times 4.60. 6,500 times 4.60. That's 29,900. So the running balance will now increase from 40,690 plus 29,900 equals 70,590. So that's how the flow of perpetual happens. You are still following the first in, first out here. However, you have to analyze line by line, transaction per transaction. And the next transaction is 120, which is pertaining to sales. And when we talk about sales, our inventories will decrease by 10,000. However, we cannot use the 10 pesos in the problem. The 10 pesos is the selling price per unit. We're going to find out what is the cost per unit of the sales. Okay? So, what is the cost per unit of the sales? Again, we are talking about what do you call this? First in, first out. So meaning on the 10,000 sales, in our minds, this comes from the 1,000 units, the first one. So you have to subdivide the sales because 1,000 units came from this 4.5. Okay? So there are remaining, what do you call this? 10,000, 9,000 units that needs to be analyzed. So the 1,000 again is from the 4.5 group because again, first in, first out. The first that will come to the company because of a purchase will be the ones that will be sold also. Okay? So meaning this is done. However, in here, you need to remember that the 10,000 purchase, you have returned to 3, right? So this is not already 10,000, it's only 7,700. Okay? So maybe, since we sold 10,000, the next group of this 1,000 units is here. So meaning, that might be the second batch that was sold. And it is costing 4.7. So this is already done also. That was already sold. Still, it's lacking because 1,000 plus 7,700 is only 8,700. Yeah, it's lacking 1,300 if I'm not mistaken. 8,700. Yeah, 1,300. So where is the cost of this 1,300? So if this is already considered sold, then this, the remaining 1,300 might be from this group at 4.60. So times 4.60. So you're gonna get the totals of this. Let me check. 1,000 plus 7,700 plus 1,3. 10,000. Okay. So 1,000 times 4.5 is 4,500. Oh no. And then, on the 7,700 times 4.70, that is equals 36,190. Again, you have to put close and open parentheses because this is a deduction because when you sell, the goods will go out of your company. And then lastly, we have 1,3 times 4.6 equals 5,980. So, if these things are deducted from the current balance of 70,590 minus 45 minus 36,190 minus 5,980, you only have 23,920. Okay? However, there is a sales return on 124. Sales returns. Of how much? 1,500. But then again, the logic will tell you again, the same with the purchase returns. So when you sell these things, so this is the first group that you have sold, and then the second one, and the third one. So meaning, if the customer will return, most likely, the returns is coming from your latest sale. So meaning, on the 1,500, 1,3 might come from here. So 1,3 times 4.60. The same logic, of course, the customer, when you sell them units, they will check it immediately. So if this is your first sale and then the second sale, that means this has been checked by your customer long before. Way long before. So the most recent, the 1,300, might be the ones that were checked by your customer and was returned. Okay? But then again, let me tell you again, that the returns is 1,500 units. This is only 1,3. So that meant the 200 may come from this group, the second latest sale that you made, times 4.70. Okay? So if that's the case, you can already compute for the sales returns. 13 times 4.60 equals 5980. So it was added back from being deducted here. Because when we sold it, it was returned. And then we have 200 times 4.70, it's 940. So from the current balance, 23,920 plus 5,980 plus 940, you have 30,840. Okay? So that's the sales returns analysis. Actually, guys, you can have the running balance 70,590 minus 45. You get the running balance here. And then from that, minus the 36,190. In my case, I just wanted it to be shortcutted. So 70,590, I deducted all of those in order to get the balance. But you can actually be very detailed more than me. Okay? So next, the last transaction is for 128, which is another purchase, 3,000. Okay? At 4.8. So 3,000 times 4.8 equals 14,400. So the 30,840 will now be added with 14,400, and we will arrive at the running balance of 45 to 40, which is basically the same with the FIFO periodic. However, the FIFO periodic focused immediately on the 9,700 units that are remaining. So you can see, it's very logical. How much was left? 9,700. Maybe it's from the most recent purchases. That's it on the FIFO periodic. How about on the FIFO perpetual? It did not dwell on the 9,700. You need to compute each of the transaction and get the running balance as time passes by. So FIFO periodic focused on this. The FIFO perpetual focused on all of this. Okay? The question is, sir, if ever there are questions, how much is the ending inventory in FIFO periodic and FIFO perpetual? Are they always the same? I have solved problems related to that, and always they are equal. So what does that mean? I don't use this when answering multiple choice questions in quizzes, in exams, and board exam. I only use this. After all, even if in the question, what is the FIFO perpetual ending inventory? It will be the same. So I compute like this. But in the actual, of course, if the company that you're working for is using perpetual inventory system, you should have this. Okay? So I guess that's for this video. We will have a part 2 because we still have a weighted average. No, I will start with the opposite of FIFO. Last in, first out, periodic. Last in, first out, perpetual. And then the sixth is the weighted average method. And the seventh, or the last one, is the moving average. And I'm hoping that I could finish this on the next video. Okay? So again, our topic for today is how to establish the merchandise inventory end amounts using different methods. And this is very much necessary for periodic, for example, in order to establish the cost of sales. And for perpetual, it's to make sure that what is the merchandise inventory end in the books is coinciding with the physical inventory. Okay? So that's it for this video. See you on the next one. Thank you for watching. If you learned, please click like, subscribe, and hit the notification bell. And of course, share it to those who might need this. See you on my next one.